you, Rajeev, for coming on our podcast. This podcast is called as the 2040 Banker. And the idea is that we want to invite a lot of bankers and talk about what has changed in the last 1 or 2 decades, how the industry has evolved, and also talk about what do you foresee in the decade to come about banking. So as a banker, if I want to stay relevant and competitive, what all I should be doing now. So that's the podcast. And when we were actually doing the list of people who we want to invite onto the podcast, we were very excited to see your background and we wanted to bring you, and that's why we requested time with you. So overall, you have spent about 4 decades in banking. That's what we know. You started your career with State Bank of India, which is a government entity. From there, you moved on to Government of Madhya Pradesh. And then you joined Reserve Bank of India for 14 years. That's the Indian regulator. And post that, you went to a few multinational banks like ANZ, Standard Chartered, Citibank, and then spent a lot of time back in IDFC Bank. And post IDFC, now today you serve on the board of several companies. So that's a quick background for the viewers. So we really look forward to learning a lot from you basis your experience. And as a first question that I want to ask you is around why actually banking is so important. And I'll quote Warren Buffett here. I was actually listening to one of the video recently, and Warren Buffett actually quoted that US is a lot better because Jamie Dimon is running JP Morgan. So Jamie Dimon is the CEO of JP Morgan. How can somebody say such a statement that US is better off because somebody is running a bank, the largest bank in US? Why is it so why banking is so important today? And is this overall hype really justified? So really we can get started on that.
Well, first, at the outset, I would like to say this is a very apt topic to discuss. And Nitin, thank you very much for inviting me to share with you my banking journey. Because I think I've seen a lot of changes in the banking industry. But coming quickly to the point which you have made, Warren Buffett was absolutely right in saying that the banking industry is very important for any economy to grow and flourish. He may have taken example of Jamie Dimon because he's running the biggest bank. But the fact remains that if you look at the countries who have successfully become a developed country or have done good things, the banking industry has played a very pivotal role. Beat it England, they started the banking industry. Even before that, even historically in India, the banking, even in Mohenjo-daro time, was there, which made the trade and commerce. Coming back to the question pertaining to our own country, I think in the last 2-3 decades, one of the reasons why the country has been able to grow so fast, because it had a very stable and a well-oiled banking system. Now, Jamie Dimon is one part of it, but I think the credit can be given to the regulators who have ensured that the banking system is strong enough to meet the needs of the economy. Having said that, one wrong action, one bank failure just nosedives the public perception and public confidence into banking industry, and then it's very difficult to revive. Coming to the most important point, that what is the role of banking in the economy of a country and in life of people? So for any economy of the country, banking plays the pivotal role of not a catalyst, but a driver of the economy. Today, if you look at it, that whether it is agriculture, whether it is industry or it is services, everywhere the role of banking has been tremendous. Apart from that, if you take out some empirical evidence, you will find that the growth in these economies can be attributed by at least 30 to 40 basis points on the banking sector. Just think of a situation that if the banking sector was not there, how many of us could have got a pizza at home? Walking to a place 3 kilometers to buy a pizza would not be a great idea. So banking plays a very important role, and there is empirical evidence available which says that if the growth of the economy, GDP growth, is X%, let's put the number 7%, then the financial sector should be at least 2.5, 3 times in its growth. Which means that if India is projecting a growth of 7%, the banking sector or the financial sector would grow at least at 20%.
Is that globally true, or is it only for India?
There's the empirical, no, it's globally true.
Okay.
There's an empirical evidence which they say that when a country grew by 5%, what percentage growth was there in the financial sector?
Got it.
So which basically sees that it plays the role of a multiplier. 5% growth multiplied by 3 will give 15% growth in the economy.
Correct.
So that is the reason why financial sector is so important for growth of an economy, and keeping an agile and a robust financial sector is almost a precondition for takeoff of an economy.
So from your example, is it correct if I say that in the next 1 decade, most of the banks in India can expect a 20 to 25% growth?
Averages are different.
Okay.
When I say it is from 2.5 to 3%, which means some banks will have only 2%, some will have 3%. So average will be 2.5%. So if the economy is slated to grow at 7%, then most of the banks will at least have a double-digit growth, could be 14, 15%, and there could be an outlier who has 22% growth.
Understood. Great, sir. I think that's a great start to kick off our discussion today. Now I want to go a bit in the past, right? So let's start about, let's say, a decade or couple of decades. Let's go back in time and try to understand what was some of the major developments that you can recall during your experience that you saw. It could be anything with respect to regulations that came in that actually changed the banking for the good, or it could be around technological advancements that you saw which made a huge impact. Maybe you can cover as much as the last couple of decades or as much as you like.
So Nitin, the watershed in the banking industry was 1969, when 13 large nationalized banks were taken over by the government.
Right.
Now the reason for that was, that's what we read and understand, that from a class banking, which they were pursuing for the limited few, they wanted to take it to mass banking. And that was a watershed, and it really changed the landscape of Indian banking industry. And that made banks to go deeper into the hinterland rather than be only in the urban, not even urban, they used to call it that time port cities. That was one change. And subsequently, most of the banks were given an opportunity to grow, and they grew very fast. And that changed the landscape both from the point of view of banking industry and the consumer.
Yeah.
Consumer, I mean, there was a time when entering into a bank was a no-no for a common man.
Correct.
So that was one landmark or a watershed. The second one was when the focus of the banking industry was moved from industrial financing to rural financing. I think that made a huge change, though it had its own points of pain because they didn't have the delivery system to do it. But it took time, and today you can see that even the rural sector, which was totally uncatered by the banking industry, is providing enough credit to those people. The third, it also helped in developing the saving habit of the people. Capital creation was important. And I think that was the one particular thing which comes to my mind, that how banking has changed the scenario in the country and how positivity has done it. Having said that, the banking which was done in the post-nationalization or maybe a decade after that was more of a lazy banking. When I say lazy banking, as they call it, it is 9 to 5 banking, which means that you lend at 9% and borrow at 5% and take 4% and do it.
Okay.
Which has now changed. Today, the bankers is expected to take higher risks, both credit, market, equity, all kind of risk. And it has become very dynamic. And if you see the banking in India today, they are comparable to any other banking globally. So that was another change which happened. The next change which happened was in 1991, after the liberalization, when new banks were giving licenses.
Okay.
By that time, it had reached the stage that 70% of the banking industry was owned by the state. So there was some element of laxity there that, okay, government owns us, why should we do it, what we not, there's no competition.
Right.
But with the coming of the new licensed banks, they became competitive and they came with new ideas, more efficiency, more customer service, productivity. So that was another watershed which happened in 91, and it took almost 10 to 15 years for these banks to really find their feet
Right.
and started giving competition to the well-established foreign Indian banks. We had some foreign banks, but they were a minuscule. Not even 1.5% to 2% of the total banking was done by the foreign banks, though they were very large in number. But they were only in Bombay, Delhi, Calcutta, Madras, basically catering to their parent or home country customers. So that was another big change. And then soon it realized that the other banks, which were the nationalized banks, old banks, they had to tighten their belts and bring them up to speed to compete with the new banks which had come up.
Yeah.
Then the next change was happened in 2000 when the banking was bit by the by the technology bug. Though the new banks were coming on technology, but it had not taken off so much. And if my memory serves me right, it was Rangarajan Committee report, which was in 97 or 98, which gave a roadmap to the banks how to make themselves competitive on the technology front.
Okay.
And that changed the whole scene where the banking, which was, a lazy banking, ledgers, this and that, moved over to technology. And the private banks did faster, and the public bank had to do it because they had to be relevant in this space.
Sorry to interrupt, but what exactly came in as a technology change around 2000? What was asked by the regulator?
See, one was, if you remember, 2000, we had this problem with the technology where at midnight of 2000.
Oh, yeah, that one, yeah.
So that was one reason why they wanted to do Y2K. The second was that the government of India and Reserve Bank of India felt that if we have to be competitive globally, we should have our banks on technology solutions.
Got it. So
And
the
that
core
was the
banking or
first
something
time
like
the core banking was introduced. And that time core banking was limited to Citi Bank, which had only 4 branches in India, and they had to connect it. Maybe ANZ had some branches. But that became the starting. But when the new banks came on the platform, they came with the core banking solution. And that made a big change in the whole thing.
So anybody who started at that time always had a core banking system in place right from the beginning?
That was the condition.
Okay.
Bank license was given only when you had a core banking solution.
Got it. Understood. So yeah, so you can continue. I think you were talking about the era
So
2000.
that was the growth. And then what happened was that over a period of time, the demand for banking was in multiples, whether it was agriculture sector, whether it was industries, small scale industries, services. In services, the technology became a very important part because it was touching so many people there.
Yeah.
And that is how the banking industry started growing and came to a place where technology became the most important part in a banking apart from garnering deposits or lending.
Correct.
So that was the point which I would say is a watershed in the trajectory growth of the banking industry.
But what after core banking? Anything else that you notice? One, of course, core banking is one big movement that I can understand now. But beyond core banking, what else then made a change?
See, core banking was basically a banking solution for the bank.
Yeah.
They wanted to reduce the drudgery
Correct.
of their employees
Correct.
in calculating interest on the deposits. But that led to another change wherein the customer said, what is there for me?
Yeah.
I still have to come to the branch.
Correct.
I still have to stand in a queue. Your data gives you access, but for me it's the same. So it changed into the second stage where they said, why can't we have the banking facility available closer to a person's house? You can't open a branch everywhere. So ATMs came.
Yeah.
So ATM could be next door in your house and you could go and transact, at least take out the money, and then you could deposit the money. All those started. Then when the technology globally came upon and the laptops and the all came,
Yeah.
then they said, okay, why can't the banks give the information on the laptop of a person?
Correct.
So you started the
Internet banking.
Internet banking.
Yeah.
So it's basically an evolution. It went to internet banking. When the mobile came, why not mobile banking? So it was a demand led growth of technology in the marketplace.
Correct.
And when this started going, I still very distinctly remember that there was a time when the clearing house, because ultimately a bank also has to clear the checks. It used to be manual. People used to carry the checks and take it to a place and exchange there and come back and do that. And it was, I think, in 1987 or 88, they came with the automated clearing processing. And from there today, we don't even have automated clearing processes. We have got check truncation process, where you just have to scan a check and the money comes. And this is how the evolution took place, and the technological, focus or the technology kept in pace with the growing demands and needs of both the banks and the customers.
Correct.
Now, for example, if you have to look at payment systems. Now, payment systems are very important because I cannot transact without using payment systems.
Right.
So initially the payment system was cash. I withdrew cash, bought my vegetables and came back. Then they said, okay, but to certain places you can use your credit card. So credit card came into operation, which is also technology driven. Then the credit card became, very expensive, or all the customers were not there, or all the vendors were not using it, all that. Then came the third stage. We said, why not we have a UPI? And that is another watershed. When the UPI came, NPCI was put in place. The mandate was to find out how the customer can be best served by the various multiple service providers, vendors. Then it evolved, and today you see that UPI is the buzz game in this, not in this country, but globally.
Correct.
We are selling UPI-led technology to globally. I'm not talking of Africa. Even for developing countries, they are all lining and looking towards us to provide them with the solutions.
Correct. So I think what I could actually see as a trend, right? So you started with the thing that earlier most of the common man was not even given an access to the bank, right? So this is how it started. But then in terms of changes, in terms of technological changes, it first came in on the back office, wherein we were looking at managing the bank in a better manner. But then more and more as we progress further in the current century, the customer started becoming more and more demanding. Customer started becoming the first priority. So a lot of changes, like you mentioned, around checks or ATMs, then laptop, mobile banking, and then even UPI, credit cards are all revolving around customers.
Absolutely.
But at the same time, we continue to evolve our back-end office operations as well. Maybe not at the same speed at which we are moving the front office operations like customer related technology. But that's the trend that I could actually understand from whatever you explained. So I also want to link it back to your experience. And I want to contrast here. So you worked with public sector, then you also worked with private sector. What are some of the key differences or key changes you could see? So for example, when you went from one government bank to a private bank and then also joined a government bank back, what kind of differences you could actually observe in the approach or the way things were happening there?
See, you can put it in a number of buckets, but the key things I would like to say is that the decision making in a private sector bank is much faster compared to a PSU bank.
And why is that?
The reason is because there is a very well-defined chain of how a particular decision to be taken. And I can say as far as technology and banking is concerned, there was also some kind of reservation, risk averseness. If we do this, how will I balance my books in the evening? Today I know how to do it. But tomorrow I put this technology, I won't even know what is happening. And second is the people. The people who were historically coming from a ledger-based banking, for them they didn't understand what they will do when the evening you get the balance sheet. They didn't believe it. And training them was the most difficult thing. Today you don't find that because everyone who's coming from the university is savvy with the technology and he knows his Excel sheet and he knows his things. But that time, it was very difficult. So that was an inbuilt resistance. That was the second one.
Got it.
And the third one was that finances was a big problem for them also because they wanted to grow in lending, not putting technological solution and not realizing that if they have a technological solution, it will give a fillip to their lending and deposit taking things. So these were the three very stark differences in private and public sector, which could have changed also in time.
Yeah.
Because once upon a time, private sector banks were considered to be great honchos. Today, if you ask me, State Bank of India's solutions are equally good.
Yeah.
And people are equally good. Though the risk remains there that State Bank of India has got a very wide scope of people.
Yeah.
Starting from very savvy people at one end and people who are still serving the industry at a very basic level and they may not be so well versed.
Yeah.
So that's basically the difference I found between the two parts of the industry.
But I would totally agree with you on the fact that what I have personally experienced the last 4 or 5 years especially, there's a huge push by public sector banks right now on technology, and they are currently using best of the best in terms of the technology. They are not behind any way from the private sector banks when it comes to launching a consumer facing application. And also in terms of, I recently saw an ad in the newspaper from State Bank of India itself about a loan under 30 seconds journey that they have launched for their customers. But this is again, I think coming back to the same point that there has been a lot of shift that we have seen between public-private, what used to be a decade ago and where we are right now. And on that, I also want to take your view on the globalization aspect, right? Do you think, especially in the Indian banking context, was there a contribution from the globalization aspect? So for example, banks like Citibank, and then there were several others like who came into India, Stanchart and all. In the last couple of decades, what was their contribution to the Indian banking ecosystem?
See, it will be not very charitable if I say that they changed the Indian banking system. They certainly came with the new ideas and more so for making money.
Yeah.
But we have to give the devil his due that it was Citibank who started the retail culture.
Yeah.
No one knew how to borrow for your car.
Yeah.
And they burned their fingers and they did it. It was Citibank who started the ATMs.
Correct.
It was Standard Chartered or ANZ which started the cards.
Yeah.
It was Standard Chartered who had technological solutions available at their branches.
Right.
Whatever they were worth it. Very rudimentary. But it was different. So they played their own role on the customer facing side.
Yeah.
But they played a huge role in offering global products in India. We were not aware of the products which were being sold in other developed countries. Second, they were instrumental in trade across borders, which they helped. We had, State Bank of India was the only bank, and maybe Bank of Baroda and Bank of India, who had branches overseas.
Yeah.
So if they had to do with a correspondent bank, the cost was very high. So slowly it started growing and they helped in that. Last but not the least, they were also instrumental in developing the treasuries of this country. Generally, our treasury, some people may not remember, earlier, the government securities, there was no mark to market. On 29th of March, Reserve Bank of India gave a rate and then you had to calculate your profits.
Yeah.
That requires technology. Similarly, rupee dollar exchange rate. We had no benchmark.
Yeah.
From where do you get the two-way quote for them?
Correct.
So all that was facilitated by the foreign banks, and that was slowly imbibed by the private sector banks and the foreign banks. And they had State Bank of India. It ran the country's treasury and do whatever it had to do.
Yeah.
But a small bank, let's say Bank of Maharashtra, which had very limited resources and treasury, it had to take the cue from the big honchos.
Yeah.
So that was another positive role played by them. Products, as I mentioned to you, in trade, commerce, and in the earlier 25 or 7 or 10, when India started going outward, then many of these banks helped in acquisition. Whether it was Chorus, whether it was Jaguar, so many India started going out.
Yeah.
And today also India is looking at various acquisitions overseas, and these banks play an important role because they are the domestic banks of that.
Correct. So, and to your point, when you mentioned about Citibank and Stanchart, I can actually relate to it because I still remember the first time I went to an ATM. It was Citibank ATM. I went with my father and we actually took out cash. That was quite a and then first time experience for us. And similarly, my first credit card was a Stand Chart card about 18 years back. So I think in that terms, you are actually right that, or maybe I think we were more exposed to those kind of banks, but we could actually see these two brands very prominently when it came to technology at that point in time. See, when technology is changing around banking and all, and we saw a lot of changes recently in the last 5 years, especially, we have seen so much of action around fintech, especially, right? So two things I want to understand from you on the fintech aspect. The first one is when everything is moving at such a fast pace, everybody's trying to deliver the best in class customer experience. How can the regulator be up to the speed to this technological revolution? Would they always be just catching up or playing some kind of catch-up game on this? Or what is your sense on this? How can the regulator play a part in innovation at the same time fueling a better customer experience through banks?
Nitin, I would say that this is a age-old observation about people, about the regulators not catching up. It was in 2008 when all that happened. They said that the regulator is always behind the curve. Maybe true. Ultimately, he's only regulating things and he can't catch everyone who's doing wrong.
Sure.
It's like, a police station. If the police station SHO is very strict, then the number of dacoities or number of wrong things will be less. And if he's lax, then every third man can say, I can get away with it. Similarly, the regulator ensures that the financial system of the country is stable and has the acceptability of the people and not risk their money. But having come to the second part, whether core banking, who was the leader? RBI only told them to be the leader, but they couldn't push. Credit check truncation, RBI did it. Allowing ATMs, RBI did it. Having NBFCs and the fintechs around. Today we are a fintech capital of the world. It was not done without the blessings of RBI. But today you have a separate entity of RBI, which is the sandbox, where it is allowing all the fintechs to come and showcase what they are doing and get a pre-approval from them and go ahead. Rather than people creating their own soft solutions and trying to roll it out, which may actually maybe not in the interest of the person or the company which is using it and the users. So from that point of view, the regulator has to be little, cautious, pussy-footed, and doing things after understanding, because it is protecting the hard-earned money of the depositor. So I would strongly feel that yes, regulator can't be everywhere, but it can create policies and environment to take the fintech company in the right direction for the interest of the country, economy, banks, and the consumers. Ultimately, that's the whole objective we have. And that's what is a typical case of our UPI, where we have mastered it. Maybe it was, we took advantage of the situations which were not so good, like when we had the demonetization or we had the COVID. That was the time when the flip was given to them, and we couldn't even think that how will he survive without a note. And we all did. So that, and I'm sure somebody in Reserve Bank or somebody in the government had that vision, but for 140 crore people, that vision has to be shared and taken in the right direction.
I'm sure. So, and the other side of it, and I remember you were talking before our discussion about the regulated, how NBFCs became regulated. Similar to that, today fintechs, a lot of fintechs are out of the purview of RBI, right? But where do you see this actually going? Because at the end of the day, the role of the regulator is to keep everything kosher and as per the norms in the best interest of the consumer. But at the same time, fintechs continue to work with banks to create better products for the consumers. And back in the days when we saw about NBFCs, do you see a similar story panning out with fintechs in the coming days?
See, ultimately, a regulator also has its own limitations in the form of people. It can only give directions and then, look them from their point of view. But having said that, the framework which the regulator has created, where the banks are the licensed entities, and then there are NBFCs who are also licensed entities. And beyond that, they have said that if you are supporting, giving value to these licensed entities, then you are a RE, which means indirectly you are a regulated entity, and Reserve Bank of India has the right to go and look at the risk management, technology, and other aspects which you are doing. So that's an indirect way of having not a detailed one, but a overlooking on-site on the people who are instrumental in helping or facilitating the financial sector. Now, is this a right way of doing it? I don't know, but I think what I have seen the last 40 years, it's a very efficient way of doing it. And what they are saying is that I can go and look at a bank, I can go and look at the NBFC. Now there were so many NBFCs, they are put in 3 categories. If they're top category, we'll see it more often that way. So they control those regulated entities or those licensed entities and ensure that whichever are the regulated entities or fintech providers, they are behaving in the manner Reserve Bank would like to do through their licensed entities. That's the best way to do it.
Correct.
It's like, a principal appointing a monitor in the class. He's not looking at it, but the monitor is ensuring that everyone is behaving the way he's supposed to behave.
So let's talk about, I think, what is there to come in the coming decade, right? So what do you think, or what do you foresee would be some of the key elements that would be coming towards the banking industry in the next 1 decade? Or to be more precise, by 2040, if a banker wants to stay competitive and relevant, what are some of the key things that they should start preparing now? Or let's say if you're talking to a CEO of a bank, what would be your advice to them right now? How should they start preparing for the next 10 years?
Very difficult question, especially when it is gazing into the future.
Sure.
And it's very difficult to give any pointed out things. But I can attempt to give you my perspective.
Sure.
But I have to say with a pinch of salt that the way the industry, the way the financial sector, the way the economy is growing, it is unbelievable, unheard of. One could never think in my younger days that India would be the 4th largest economy of the world and we're knocking at being the 2nd or 3rd.
Yeah.
One could never see the kind of banking which is being done today, done that time. So with that thing in mind, what I see now, I would put it in about 3 boxes. The first box is what I see in the next 2 years.
Sure.
Then in the next 10 years.
Yeah.
And beyond 10 years, to quote unquote Karl Marx, in the long run, all of us are dead.
Correct.
So we can always leave it to the people to judge and see what happens. I think in the next 2 years, I see the banking industry growing pretty fast in the areas of rural and SME because it is government driven.
Yeah.
And for that, it will require a huge amount of technological solutions, which can only be provided by the fintech companies or by the fintech companies who are able to partner with the banks and extreme case, allow their solutions to talk to the core banking solution of the banks. Ultimately, if you have a seamless solution, that's the best.
Yeah.
So one thing I see that the banks will be more looking at the help from the financial sector of fintech area to help them. Not only to help them, but also to upgrade their own solutions.
Yeah.
Ultimately, core banking solution has a finite life and a volume.
Correct.
Beyond that, it has to upgrade itself.
Yeah.
Not because it wants to, because the next door neighbor has got a much better solution and he has to be competitive with him. So there would be a huge amount of focus by the banks, which was front-ended now, but it'll have to go to back-end. For example, storage. I mean, the amount of, everyone says cloud, but cloud also has a limitation. Now, India today has only 3% of the global storage of data churned, and we churn about 9 to 10% of the global data. Where would it go? Who will give that facility? So that is going to be one challenge where the technology will have to find a solution for the back end also.
Yes.
And solutions for that.
Right.
The second area which I find is that along with this, and sorry for being a little cautious, there is a huge amount of potential losses to the depositor. investor, and the banks, which in loose term we call as frauds. So we will have to do a lot of effort to ensure, which could be putting technological solutions like in Reserve Bank of India has said ki two-way authentication, and now they are coming with a third one where you either your retina could be there or something. So all those things are evolution. I didn't tell you that these are humongous changes. We didn't even know where the credit card is being used. Today, all of us know where we have used. So that is the technology. I think the storage is one. The third one, which I find is going to be a huge challenge for the banks, is the new act on data protection. DPDP.
Yeah.
That is because we are not used to it yet.
Correct.
We don't even know. We don't even know what the value of data is, how it has to be stored, how it can be misused. So that is going to be a big challenge for the banks in the years to come. And last one, which I personally feel is going to become a huge challenge is that the customer is going to be more hungry. And the banker will have to provide him the services. But it may not have the wherewithal of technology and people to do that.
Correct.
And we have a classic case of one Southeast Asian bank, which was called the darling of the banking industry in technology. And today we look back and they say, I think they have bungled up. 3 regulators have penalized them. Now, holding queue on the side of the bankers. I mean, as a CEO, what do I know that what is happening in that particular thing and what KYC is done or not? But you have not put the processes in place, which has led to a situation where the regulator had to reprimand you. So these are the 4 things I see in the next 2 years, how the banking industry is going to face the challenges. Then coming to the next part, this was more on the structural front. On the business front, there is again going to be a challenge because as we speak, the deposits are not coming. Our capital markets are booming and banks are not getting the money deposits. If they are not getting the deposits, then they are not able to lend.
Correct.
If they are not able to lend, how will the growth happen in the country?
Correct.
Now, somebody can say that the capital markets will give the money, but that's a far cry. As of today, the model is that the banks give money to the industry to invest and in turn the growth of the country happens. So that is going to be a big challenge. The third one or the mid-long term is that banking industry will have to consolidate at some point in time, which has been happening. Government.
But why is that the case? Why it should happen?
The reason is because it may not be viable for a bank for a road to have 6 banks. That's why in the last 5 years there are more than half a dozen PSU banks which have been merged. And if you look at private sector also, there's a weak bank, he has to merge. So that is also one of the things which I foresee, that the banking industry will have to consolidate to become more efficient, both cost-wise and customer service-wise. So medium term and long term, this is the 2 things I'm seeing. And if you're looking at next 20 years, I think in the next 20 years, the banking industry will look totally different from what you're looking at now. It is like telling you that 30 years ago, we had a branch where you would open at 10:30 and somebody cleaned the tables and then, had chai and then people came and took the money. And today, it's not that. Maybe 20 years later, which you are already seeing it, that 50% of the people who are banking will not even enter a bank. They will do it at home. Many of us, our cohort, and I'm sure the millennials are much better off, they have not seen the bank. They don't need to. That will require a different mindset for the banks also, that if there are no footfalls, does this model work? We still have a brick and mortar model, but is it become inefficient or unproductive, or there is something better than that? So these are the 3, 4, 5 things I see how the banking, and then globalization is another problem. With that happening, you will have to bring yourself up to speed to the global standards. And the last thing, which is my personal view, I think manpower is the most important thing, and a skilled manpower, and a manpower which is fit for purpose. So manpower we have, skills we are trying to develop, it takes time. But are they fit for purpose is a question mark. So if there is a sea change in the banking industry, there has to be corresponding change in both technology and the manpower to manage that change. Otherwise, you give a Jaguar to a person who doesn't drive. He will polish it and keep it. But what's the use?
Sure. I think these are great points. Actually, I was thinking I'll summarize it, but somewhere I just lost track of because there were so many good points around it. So for the viewers, maybe we'll just try to summarize it some way and share it with them on some channel. But since you talked about the skill set that would be required, right? For the next generation of our youth who are, let's say, graduating right now or would be graduating in next 10 years, in terms of skill set, what specific thing might be required if they are getting into the banking industry? And how would it be different? So when you got into banking back in 1980s versus now, what kind of radically different skill sets currently are required? And maybe if you think what hasn't changed at all from then to today?
See, I've been out of the banking industry for 3-4 years, so I wouldn't be able to give you the current thing. But what has not changed, the framework which was created 30 years ago for organization of the bank.
Okay.
Now that framework still continues, that if you have got 18 branches, there has to be regional manager. If there are 5 regional managers, now that is maybe not required because you have technology. But the mindset is that the regional manager, when she wants information, tells the branch manager. Why can't you open your laptop and find out it is there? He's not going to give you something more. That's the mindset change. Now, that's on the people who are in the bank. For the new people who are looking banking as an industry, I think the historical way of joining a bank at a clerical level or at the probationary officer level is no longer as attractive. Because people who have ambition, they will say, after that, what? So there has to be now change in a recruitment of the banking industry, which is more specialized. Today, I'm sorry to say, if I can use the word, the stock of bankers who are risk managers per se is very small.
Okay.
RBI has been telling everyone, please develop your risk capabilities. Earlier, there was certification for risk managers and all those. Today, it's not required because it is automated. For a credit card, you don't need a risk manager. For a car loan, you don't need a risk manager. For mobile loan, so now you have to develop that category of people who look at it as a specialist. Now, which bank ever thought that they need to have a chief risk officer? Only 10 years ago, they said you have to do it on. Which bank thought they need a CTO? No one thought.
Okay.
Now, you may come with a situation where banks are told that we need a data management officer also. So those are the new areas we are opening up, and banks will have to come up to speed to get specialists in those people. Rather than saying, Acha Rajeev, now you are the GM, now you become GM fraud management. Or something like. So I think that is something which has changed. And the banking sector, I remember when I was, 10 years ago, the average age of PSU banks was 58. I mean, who's going to lead the bank? And there was a huge vacuum in public sector banks where they had to reduce the promotion to EDs from 56 to 52 or whatever it is. But they have to do their HR management to ensure that people come in place.
And one of the points that you mentioned, that maybe we need more risk managers in the bank.
That's one part. Maybe technology people. I mean,
Can technology actually replace them? 10 years down the line, can technology manage most of that? Do you think so?
No, it can't.
Okay.
Risk is a risk. Because the risk of a bank only you can know. You can have parameters and measure it.
Okay.
But you cannot say now that otherwise if technology could manage the risk, then we don't need human beings. You put in the details and the money will come out. Somebody has done it. And one thing which I also feel needs a specialized people is cyber security. No one is talking about it also in India. There is a huge, huge risk which we are sitting on the cyber security. So these are the areas which are the specialized areas for which there should be a huge demand in the banking industry, and cadres should be built rather than feel sorry at a later date.
Sounds good. So Rajeev, I think that's what we wanted to cover today. It was very insightful. talking to you and all the topics, especially on the last part where you mentioned what is there to come in the next 1 or 2 decades. I think it would be very valuable for our viewers if they just go through those points and try to identify what could be opportunity areas, whether somebody who is just getting into a banking job, how should they shape up their career? Somebody who let's say wants to become the CTO or just become the CTO of the bank, what are some of the things that they need to plan? Similarly for a CEO, I think a lot of those points would be very insightful and valuable. Any parting thoughts you want to give to the people who are watching the podcast right now?
Well, having been in the banking industry for 4 decades, I love it and I wanted to flourish it. And all of you have to make yourself up to speed and good enough to take this to further heights, because this is one area or an industry which is not dedicated to itself, but dedicated to all other industries to grow. And we can be the engine of growth of the economy. And I think please play your roles well and be happy and satisfied.
Great. Thank you so much, Rajeev, for coming on the podcast.
Thank you for giving me this opportunity.